I want to introduce Jayden to you guys. Jayden Doye is with Prestige Accounting, and he is a certified public accountant. Jayden was not always a financial guru, guys. He actually grew up in a household that was just shy of the federal poverty line in Prince George's County, Maryland. And he has always had a yearning for financial health and financial growth. Through the years, he's been able to grow a thriving practice where he works with clients just like you. He's been able to put his BS degree in accounting from Townsend University to work for real estate professionals just like you. He helps them really achieve their visions, building healthy financial portfolios. He's also helped with just getting that sustainability, that financial sustainability in order to minimize tax liabilities. So Jayden, if you could just share with us a little bit more about the car liability, the travel stuff. Can you go into just touch on that a little bit?
Absolutely. So when it comes to travel expenses, realtors are constantly driving all over, no matter what city you're in, right? So there's two different type of expenses. You have your general travel expenses. Those include your airfare, tolls, parking, things like that. That's going to be qualified all under travel expense. Then you have auto expense. Auto expense, you have two choices. You can do actual or mileage. And with actual, you're going to take the gas, repairs, maintenance, and insurance, things of that nature with the business vehicle. With mileage, you're going to multiply your business miles by the IRS given mileage deduction rate for that year. So for 2020, I believe it's 57.5 per mile. So if you had 10,000 business miles, you would multiply that by 10,000 business miles, you'll multiply that by 57.5 cents to get you a business deduction, auto deduction of $5,750.
Awesome.
So, just driving around can get you a $6,000 deduction.
Yeah.
And because it's essentially essential for your business.
Official to buy the vehicle this year, even if it's on December 31st, so that you can get the full deduction. You don't have to pay for the vehicle in full to get the full deduction. So
Yeah.
when it comes to tax planning, you have to talk to your tax professional or CPA to determine, does it make more sense for me to do this in 2020 based off of my income, or would it make more sense for 2021 if I'm projected to have a much higher income in 2021?
Yeah. Yeah. What you're saying, definitely. I should have done better planning in all, I'm an open book. I bought a car last year thinking that I was going to get that deduction the last time I did my taxes, which was this past year. And I should have actually, got the deduction this coming year. But my husband bought a car. So I don't know if that'll work for us this year or whatever, but
It
we're trying to get that deduction you're mentioning because I think it's a really good opportunity. So
Well, it depends. You have
yeah.
my number.
Yeah, I
Let's make
know.
it
I
happen.
know. I definitely will be calling you this year for sure. I love the fact that you're projecting for the future, which sets your clients up financially in a healthy space. So we're not in hindsight doing things in hindsight. Oh my goodness, we shoulda, coulda, woulda. But you're actually looking, having a bigger vision for your client's business, which is amazing. Really is. So are there any other deductions that real estate professionals need to think about when it comes to, um, you know, with the, travel or car, and outside of gas and mileage and that sort of thing? Is that pretty much what you were touching on, or is there anything else we need to know about that?
Absolutely. One of which I would talk about is internet advertising. Advertising and marketing in general is definitely a business expense that is going to be essential. Now let's delve into that a little bit. So people will ask me, "Hey, I did this photo shoot. So my wig, my suit, my red bottoms, all of these should be tax deductible, right?" And I have to explain to them what parts of that are going to be tax deductible. So the actual professional photographer that you worked with, that service is going to be tax deductible. The marketer that you work with, people should be working with Shanka, but hey, in case that they're not, whoever they're working with, that that is going to be tax deductible, and you're going to see a return on investment. So it's very important to make sure that you're putting advertising into your budget. um, and and a lot of times people say, well, how do I keep track of it? I say, even though you have the bank transaction, it'll show up on your bank statement, still make sure that you are actually keeping the receipt. So when you get that order confirmation page, make sure that you're keeping the receipt. Business meals, when you're having a meal with a client or a prospect, make sure that you keep the receipt of that as well. What I like to do personally is I will take a copy of the receipt and write on the top of the receipt who I met with, sorry, who I met with, what the business purpose was, and I'll take a picture of it and then upload it to my QuickBooks Online, because the QuickBooks Online has an app. And business meals are 50% deductible. So make sure that you're running that through your business account and that you're uploading that to QuickBooks Online.
Nice. Nice. Well, let's get into the different types of filing. I know a lot of real estate professionals are organized as a sole proprietor and filing a Schedule C. That's how I'm actually filing. I'm not a realtor, but that's how my business has been filing taxes for several years now. Let's talk about that. What are the advantages of being organized as a sole proprietor? And can you go into the deductions that apply to those who actually work from home?
Definitely. Well, when you're working from home, you have the home office expense, right? So you can take a portion of your, whether that be insurance, your utilities, your internet, phone, all of that stuff. You can take a portion of it based off of the square footage. So if you have 1,000 square foot home and 250 of that square feet is your home office, exclusively your home office, then you're going to divide 250 divided by 1,000 and multiply that times all the eligible home office expenses to get your home office expense. Now, keep in mind that you have to have actual a profitable business to get that home office deduction. So if you're already running a loss, then it's not going to make the loss go more, gonna make the loss go deeper, if that makes sense.
Yeah.
Now, there's a simplified version of that the IRS will allow you to do $5 per square foot. You can do the simplified method as well if the method that I first spoke about it seems to be too complicated.
Yeah.
Now, when it comes to being a Schedule C in particular, if you're running a profitable business, I would say at least anywhere from maybe at least $24,000 net income. So that's income minus expenses. That is when I truly believe that it's beneficial for you to switch out of a Schedule C, because there's two other options. You have a C corp and an S corp. So most real estate professionals that I know are in an S corp, and with an S corp is a pass through entity. So you have your business return that is filed. It's a informational return, and a K1 is generated. That K1 flows through to your personal return, to which you only pay ordinary taxes on. See, when you're a Schedule C, what's happening is you're not only paying your ordinary taxes, but you're also paying self-employment taxes of 15.3%. So if you're self-employed and you have $100,000 of net income on your Schedule C, then you multiply that times 15.3%, and you get about $15,300 of self-employment taxes that you're just paying the government. And so when working through the tax planning process, it's important to talk to your tax professional about what tax entity is going to be the most beneficial for me at given my income and my full tax profile. So with the S corp, I personally like S corps because it forces the business owner to get more discipline. Because one of the requirements of being an S corp is that you pay yourself a reasonable compensation. So while previously, before getting into real estate, many people were W-2 employees and they had to live on a certain budget because they knew that they would get paid on certain dates. When I'm working with my clients, I like to get them on that same type of structure. Let's get you on a payroll. Let's make sure that you're paying yourself twice a month and that you are living on a personal budget. You're using that money that you're getting from your payroll to then pay down debt and live the life that you want and provide a livelihood for your family.
Mm, love that. Love that. I think it's what you just said should pretty much inspire all of us to take a look at our businesses, especially as we grow, and not just move along and chug along as things were set up prior because we're graduating to the next level. It may be an opportunity for us to go into a different filing status based on that, is what you're saying.
Absolutely. Yes,
Okay.
absolutely. And it's not too late, honestly. A lot of times you can, I mean, you can elect now before the year is over, but even in 2021, if you started to plan in 2020, that is,
Yeah.
still say
Perfect.
everyone please talk to your tax professional. But I have had situations to which someone started planning in December of 2019. The S election was officially done in 2020. It was approved for 2019, and instead of paying, I think about 13,000 plus dollars in taxes, they actually got an $82 tax refund. And that was by doing even some last minute planning. I'm talking about they had to make a purchase on December 31st. They used that vehicle method that
Wow.
I said earlier, and this person was a realtor.
Wow. Yeah, I have a curveball for you. You know what we're talking about is really inspired to share my story. And as you all know, I'm an open book. I'm not here to, fake like I have it all together. But there have been, it took me a couple years to make money in my business, and now we're six-figure marketing agency. I have a team, and everything's just growing. But it did take me 2 full years to make money, and even in the first 4 years, been in business six years now, even the first 4 years, I had this mindset of like an employee where I wanted a tax return every year. And it wasn't until the past couple years that I got smart about tax planning, I realized that I actually didn't want a refund every year. And even when I was going through the PPP loan process, when I was getting assistance with getting those documents filled out, and I actually got a couple grants as well this year from, through the CARES Act. And when I was going through those processes, I've had professionals say, you're so lucky that you did not write off everything in the world so that you could get a refund, because my husband's a W-2 employee. So it would have been easy to do that. But if you're not writing off everything, you're actually opening up more opportunities and you're looking more profitable on paper. Even we refinanced to do some home renovations. Even that really helped us because it made me look like I was actually making money instead of all the money going out to expenses. Can you speak to that? Is that something that you suggest, not writing off everything in the world for that refund, or what's your take on that?
Absolutely. You do not want a tax refund. You get a tax refund in two scenarios. One, you're living in poverty, or two, you've overpaid the IRS. You've given the IRS an interest free loan. Now, if anybody listening to this or watching this likes to give out $5,000 interest free loans, please call me as soon as possible, okay? Because I would love to talk to you, treat you to dinner, okay? But yeah, in either case you want. And a lot of times you can actually report more income. I've seen people where now that they're in entrepreneurship, they're reporting more income on their business, but they're paying less taxes than they were when they made when they were W-2. So a person hypothetically who made $60,000 in their business could actually pay less taxes than the person that made $60,000 being a W-2 employee. It's very possible. And when you want to elevate your life, like when you want to do the home equity line of credit, when you want to purchase homes, purchase cars, and things of that nature, you need to show income. So that's why just tax planning is important, because just like before when you were W-2, the taxes were taken out. You just didn't know that they were being taken out. So just, having that mind shift change is very important. And when I'm educating groups of people, I always try to inspire them to have that mind shift change and let them know it is okay to report the income, because ultimately you want to live the life that you want.
Yeah.
Whatever, I feel like when you put that amount of money on your tax return, like you only made $10,000, in a way, I feel like that's manifestation, right?
Yeah.
So, in a way, it's like put what you want, put it on paper, right? I'm going to make $100,000 this year. Put it in paper and work towards it, and it'll happen.
It's a poverty mindset for sure. I tell my kids all the time, when I was in high school, I was in this psychology class, and for some reason our psychology instructor had us write down what we thought we would be making 10 years after we graduated high school. And just like you, Jayden, I grew up on South Side Chicago, so I understand where that poverty, coming from that, seeing that environment, and then wondering, how am I going to get out of this? And I, fortunately, we moved, and I was out of that environment, but I still had that poverty mindset. Even I remember, just some things about the money and not feeling secure in money, and thinking that it was something that would not be around. And even in high school, they had us write down how much we would be making, and I only wrote down $50,000 on a sheet of paper. And don't you know, it took me even when I worked in corporate America, climbing the corporate ladder, college graduate, everything that I had going for myself, it was so hard for me to get out of that mindset of making $50,000. It took years. So you're absolutely right. Our mindset, having that poverty or abundance mindset, does have an impact on money and how we see money, and how healthy our thinking about money has an impact on our finances for sure.
Honestly, that is what really inspired me to get into accounting. The thought process of how people spend their money, where they're spending it, why. It's always been intriguing to me. And one day I do want to write a book because, like you, I don't come from a rich family. We definitely had hard times. And I'm hoping that one day I can inspire the masses to maybe accelerate that process and getting out of that mindset, because it is truly a mindset change. I'll tell you, this year when I hit over $100,000 during a pandemic, my head was like, I had a headache. My head was pounding on both temples, and I had to leave and go home early because my brain could not process it. I have never been there before until this year. And so it truly, truly is a mind shift change, but it can happen. And that's what happens when growth happens. You get a little uncomfortable. You might lose a weight, you might gain weight. Guess what? You get a little uncomfortable, you change out the pants. So that's just how I feel. Like when you're making changes in life, change the outfits change too. So that's
That's right. Absolutely. Absolutely. Well, let's talk about health insurance. Is health insurance tax deductible for realtors? Let us know a little bit more about that. I know that health insurance can be a difficult thing. I know a lot of people, a lot of friends of mine decided not to become entrepreneurs because of the fear around what would happen to their health insurance.
absolutely. So don't let health insurance stop you from entrepreneurship, please, people. Let me tell you, because health insurance normally is not tax deductible, right? However, for self employed individuals, it depends. Okay. So there's something called the self employed insurance deduction. So essentially, let's say we talked about earlier about an S corp, right? Being an S corp owner, you can pay yourself. Let's say your reasonable compensation is, let's say, $40,000. You can include in your compensation reimbursement for healthcare premiums. So now that, let's just say, $400 a month that you were spending before on health insurance that was not tax deductible, it is tax deductible. So if we just did a little quick math, 400 times 12, that's $48,000 a year, right? $4,800. Now, let's just say your effective tax rate is 25%. You're going to get a savings of $1,200. So you immediately see the return on investment in paying for health insurance being self-employed. In addition to that, you're also ensuring that you and your family are going to be safe in the event of a medical emergency.
Absolutely. Absolutely. So, what about the healthcare.gov and supplemental health insurance? How does that play into all of this?
That's a good question. So you still would be eligible if you got your insurance through the marketplace versus if you went to a direct insurance company. So what happens when you get your insurance through the marketplace is that they give you a form 1095A at the end of, well, the year after in the first quarter. And that pretty much is a reconciliation because when you fill out the healthcare marketplace application, you're estimating your income and they base your premiums off of that estimated income. So depending on where you are within the federal poverty line, that'll determine if you will get a subsidy for your health insurance or not. So if you said that you will only make $20,000 throughout the year and they subsidize your health insurance costs, but you ended up making, let's say, $200,000 for the year, you will have to pay back that subsidy. But the good thing is that the premiums that you're paying through for the healthcare marketplace for your health insurance every month, if you are self-employed, can still be tax deductible.
Nice, nice. Well, let's chit chat a little bit about gifts. I know a lot of real estate professionals, gifts is a big part of their marketing. And can you go into the importance of making sure that your gifts are working for you and your tax planning?
Absolutely. So when with business gifts, only $25 per person is going to be tax deductible. So a lot of times I see people with these big baskets and these bottles of Douce, Patron, all that expensive alcohol. And I'm just thinking to myself, little do they know, only a little bit of that is going to be tax deductible. So what I recommend doing is if you're a big gift person, talk to your tax professional about figuring out a way to make that advertising expense. Okay, if you can prove in the event of an audit that those gifts were advertising, then hey, then you could go above that 25. But that's just the free gem. I'm going to stop right there.
Okay, we can't give it all away, right?
Nope.
So, what do realtors and real estate professionals need to know about their self-employment tax? Do they really have to pay for it?
If you are profitable, then yes,
Okay,
and if you're filing on a Schedule C, you will.
gotcha.
But there are ways to avoid that. Like I said, depending on the entity that you're in, you can avoid having to pay that extra 15.3%. So it's a lot of people try to save costs by doing their own tax return, but I'm going to tell you guys, affordable tax planning is not as expensive as you think it is. And a lot of times when people are doing their own tax return to save money on the actual tax prep and tax planning fees, they end up overpaying the IRS. So kind of like, weighing out the options is going to be very important, especially if you're running a profitable business, which is going to be important in order for us to live.
Yes, absolutely. The sustainability is key. That's why I bring people on like you. It's not just, I can only speak about marketing. I could not, when you were crunching those numbers, I just got nervous because numbers are not my thing. But we just want to make sure that real estate professionals are set up, not just with their marketing, but their operations as well. And that's where you come in. So I want to find out from you, looking at 2021 and even the new, hopefully we'll get a stimulus act. We don't know, maybe even preparing for new PPP loans or just being set up for success for maybe changes or what you see coming for 2021. Can you give us 3 top tips you would do today if you were a real estate professional in order to make sure that we are good to go with our taxes?
Absolutely. Okay, so the first thing would be to figure out what your niche market is going to be. In Atlanta, we have hundreds of thousands of real estate professionals. So in this oversaturated market, you have to diversify yourself. So figure out what your niche market is going to be and work with a professional marketing company in order to reach the masses and reach your target market. Next, I would say develop a 2021 business budget and projections. Really look at both your personal goals and your business goals, and really think and do the math to figure out if it is real, if they are realistic or not. If you're only used to selling one house a month, then 2021 is just a new year. That doesn't mean you're going to sell 7 houses a month. So be realistic with your projections and making sure that you're setting aside enough money for yourself to live and also pay down any debts that you may have. That would be the second one. And the third one would definitely be to work with a professional accounting professional that specializes in working with real estate investors or real estate professionals. That is going to be key because they know your industry. They know what's typical and what's not typical, and they can advise you on how to become more profitable and how to pay less to the IRS.
Great, Jayden. I have a feeling you're the man for that. So, where I know people are going to
Could
be
be.
asking, where can we find you? What's the best place online to reach out to you? How can we get some more information and keep up with you? You have some wonderful marketing, so I know people want to check you out online.
Absolutely. So I'm a very personable person. My time is kind of limited, so there might be a delay in the response. But I can be found on Instagram at the Great Jayden. I can be found on Facebook. My name T Jayden Doye. I can also be found. Don't use Snapchat anymore. So the next best
You're
thing
on
would be
LinkedIn.
yes, LinkedIn. Yes, LinkedIn is a great place to find me as well. My name Jayden Doye, CPA, and then you can also email me if you want to contact me directly, Jayden at prestigeaccountants.com, and that's accountants with an S.
Perfect. Jayden Doye of Prestige Accountants, we are so appreciative of you today. I know we all got some great value. We're going to be taking a second look at how our businesses are operating, and you have provided a lot of insight for us today. I really appreciate your time today.
All right. Thank you for having me. And thank you, everyone, for listening and for watching. And best of luck to you all in 2021. May it be a much better year than 2020.
Absolutely. Thank you so much.